This might be one case in which some of your critics, often from the right, are glad to hear from you.
Hello?
Mr. Secretary, can you hear me?
Yes, now I can, sure.
Okay, my point was, after reading your piece, some of your critics on the right might actually be on your side on this one.
Well, I don't know what different political actors think, but I think that one thing that every American ought to support is the laws of arithmetic. And the laws of arithmetic don't say you can't borrow money, and indeed often it's a good idea to borrow money. And I've been very much of the persuasion that we needed more fiscal stimulus over some number of years to have expanded the recovery more rapidly. But this idea of so-called modern monetary theory, that the government can just print the money it needs to finance itself and therefore it never needs to worry about paying its bills, I don't think that's a realistic calculus. And countries all over South America have tried it with disastrous results. It was tried by the socialist Mitterrand regime in 1981 in France, and they had to reverse itself. It was tried for 6 months in the late 90s in Germany, and they had to reverse themselves. So yes, fiscal policy is a very important tool, and whenever the next recession comes, we're going to need a lot of fiscal stimulus. But this modern monetary theory idea where we can guarantee jobs for everybody or have Medicare for all and just rely on money printing to finance it, I think that's quite a dangerous approach, and I'm sorry to see that it's gaining more adherence. What my column points out is that it's sort of the new voodoo economics, that there was a valid idea 40 years ago that taxes had incentive effects, which got transmuted into the invalid idea that you could cut taxes in order to raise revenue. The Laffer curve, supply-side economics, all of that. That turned out to be very costly, and it had to be reversed when the United States tried it. And I think something very similar is true with respect to modern monetary theory.
So, Secretary Summers, it's Sarah. I'll play devil's advocate. Isn't that what's working right now? I mean, the 10-year Treasury yield is super low. The Fed has now been on pause, and we are running back up against $1 trillion deficits. President Trump funded his $1.5 trillion tax cut at a time of economic growth, and the market doesn't seem that worried about it.
The market's not worried right now. The economy is slowing, or appears to be slowing. Look, I am for fiscal stimulus. I've been arguing for most of the last decade for more fiscal stimulus. I think it would have been much better to fix the country's bridges than it was to provide a tax cut that's mostly financing stock buybacks. I think it's much better to support middle-class families than to engage in the kind of tax shelter creation that the Trump tax cuts engaged in. But it's one thing to say that appropriately managed fiscal stimulus is a good idea, and it's a quite different thing to embrace a theory that all government debts can be paid by printing money. And it's that latter idea that you should just hold the interest rate fixed, that you should overwhelm central bank independence.
Why can't they, if we have the reserve currency that everybody wants right now?
Because we won't have the reserve currency forever if we do that. We had the reserve currency, and it was tied, and all the other currencies were tied to ours, and then we spent indiscriminately during the Vietnam War, and then we didn't. And we saw it, you know, the French thought they had a strong currency with the franc, but they were forced to back off from these kinds of policies in the 1980s. The United Kingdom pursued these kinds of policies and had to call in the IMF. We've seen these kinds of policies in Latin America many times, and the result has been hyperinflation. Look, in all things, economics is a matter of balance. And there's a balance to be struck. The avatars of austerity aren't right either. But that's not the same thing as saying we can rely on money finance for everything.
As far as trade goes, the Journal this morning has noted that the phrase "Made in China 2025" was dropped from the Premier's address at the People's Congress. Obviously, continued speculation about a deal signing in Mar-a-Lago. Are you impressed with what appears to be some flexibility from the Chinese on industrial policy and trade?
I think it's a good example of the foolishness of much of this, that it's being treated as an achievement to get them to stop using the words "made in 2025 That points up how
I think the administration would argue
ridiculous
it may not end there.
Much of this discussion is. It might not. It might not end there, and we'll have to scrutinize any agreement that results. If the focus is on the bilateral trade surplus, then you'll know that something foolish is happening, because that's something that's easily manipulated just by reorganizing trade. They buy natural gas from us. We sell our natural gas to them. Somebody else buys the natural gas from somewhere else that otherwise would have been traded. We'll have to see whether there are meaningful changes in intellectual property rules. We'll have to see whether there are meaningful changes in the rules on businesses entering. But above all, we'll have to ask ourselves, even if we do see some changes, and even if they do benefit some American corporations, most of whom are aspiring to produce in China, not produce in America, employing Americans, how large the benefits will be, and whether the risks of the economic turmoil we've had during this trade war period, whether those were risks that were worth bearing. I'd be surprised if our unilateral approach is judged wise.
Secretary Summers, just back to the U.S. for a moment. There's so many proposals out there right now among some of the candidates that are running for president, all getting at this idea of taxing wealth, whether it is an actual asset tax like Warren or Sanders puts out there. There's this new idea of a financial transaction tax. Some want to go after buybacks. Which one makes the most sense and which one makes the least sense?
I think that if we found ways to disallow interest deductions associated with buybacks, that would be a good thing. There's nothing, it's okay to buy back stock, but if you borrow money and get government subsidized to do it, I think that's the wrong thing to do. You know, I haven't made a definite judgment on wealth taxes. I'd sure rather tax carried interest. I'd sure rather get rid of special benefits for real estate entrepreneurs like the president. I'd sure rather collect tens of billions of dollars a year in taxes that are owed but not paid. I'd sure rather go after corporate tax shelters. Those seem like things that would make the economy more efficient and would fit with everybody's concept of fairness. And I think we ought to look to those sources first before we look to having whole new taxes that are going to be very difficult to administer and probably very difficult for some people to pay, because their assets are very valuable, but they may not produce any liquidity, any cash that can be used to pay the tax. So I wouldn't start with wealth taxes.